Hello and welcome to Investors Hangout, your weekly guide to making smarter financial decisions. This series is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now today we've got with us Dhirendra Kumar to discuss if this is the right time to invest in gold, how much should you invest, and which vehicle suits your portfolio the best. So welcome Dhirendra.
Thank you.
First up, gold's reputation as a hedge to inflation is legendary. But why do you think now is the right time to invest in gold?
I don't know whether people should invest in gold or not right now because after it has crossed 100,000 rupees, 1 lakh rupiah, which is a very large round number.
Right.
There is always a reversion to mean, like it has crossed, and there is a reason why gold is at a high, why it can get higher, why it may not fall in a hurry. But at the same time, gold has a great reputation. It's the only fund. It's supposedly, there is a history of 5,000 years where gold has been a currency. Yeah. So it is the oldest financial asset if you think it is a financial asset. Then comes, why it is going up. It is going up because whenever there is uncertainty in the world, generally in the equity market and in the bond market, people go after gold, chase gold simply because it looks like a safe haven. Mm-hmm. Whether it beats inflation or not, because there has been long phases of in the life of gold, in last 100 years at least, when gold has not been able to beat inflation. In respect, in some countries or in some countries it may be, but gold is a store of value. It has never happened like equity market or bond market that it has collapsed. It may not beat inflation, but it has remained a good store of value. And in the last 20 years, gold has gone up dramatically. It has gone ballistic for a variety of reasons. Before 2008, the financialization of gold ETFs and other things, became possible. And in the last 4 or 5 years, and more so in the last 3 years, central bankers started buying gold long time ago. But of late, they seem to be, very inclined to store gold ever since this Ukraine crisis happened. Because that is when people realize that having dollar assets may not be as safe as it has historically been perceived as. So that has created a whole new demand for gold, and that is why it has gone up very dramatically. And investors' favorite pastime is chasing recent past performance, so that everybody thinks that gold only goes up. After all, it is gold. But that may not be true. There has been a phase, there was a period when for 5 years the gold prices went down, and it went down by 45%. Because gold is not a productive asset. Fine, when there is great uncertainty, it finds its taker, and it is a store of value. But if everything else starts generating superior return, there is a greater promise, there is a greater optimism in the air, then I don't think people will go for gold, and that leads to a secular decline in the value. I don't know when it will happen, but there has been a precedent, and not very long ago, that gold prices went down by 45% from its recent peak.
Okay, so how much of gold should one have in their portfolio?
I would say that, first clearly distinguish between having jewelry and having gold as an investment. Having gold as an investment is that something which you have, which you can sell if the need be, and that is something which is completely uncorrelated to equity and debt. And so with that in mind, I would say that, one should have a very small component of gold in one's portfolio, at most 10%. And about 5% is fine, and if you don't have it, don't regret it.
Okay. So let's map out the landscape. What are the different kinds of vehicles which can help us own gold?
Oh, there are a variety of things. One is the jewelry, and that is not so nice because you should look at it as a consumption, because 20% of the value of the jewelry is consumed because that is the that is the incidental expense of, if you turn that jewelry into gold, that will be the impurity or the making charges and other things. Second is that, in India, everybody should keep in mind that the gold that we buy in India has a customs duty, and that jacks up the price. So Indian gold is more expensive than the global gold simply because, so that is not the true worth, discounted by the customs duty. Third is gold ETF. Gold ETF is, the underlying is gold, and you buy and sell it like you buy stocks. Then there are gold funds which invest in those ETFs and you buy them like mutual fund at that day's NAV. There used to be one vehicle called sovereign gold bonds. These were bonds issued by Government of India which promised that the price of these bonds will be honored at the time of redemption, maturity after 8 years, in very much in line with the price of gold. So in that sense, that was the finest, but now it is not available. You still have those older bonds which are traded in the market and you can buy them, but they are currently trading at a premium to the prevailing price. So that actually does not make it, that does not make sense. The next best thing is gold fund. Buy it with ease, they're available, and you buy it, and you can do your SIP, do 5%, 10% of your money. Then there is a third form. I would say that if people are excited about gold and they don't know how to mix it up and when they should have it, when they should not, then there are multi-cap funds, multi-asset fund, which invest 5 to 10% into gold as and when it is opportune, and they will keep away from it as and when opportune. For new investors, all those people who are anxious about the market, and for them this multi-asset fund could be interesting because you are getting equity, debt and gold all in the same package with great simplicity. So the best option for people is to buy gold ETF or gold fund. The advantage of gold ETF is that you are buying it, advantage or disadvantage is that you are buying it from the market. Sometimes there could be a small difference between the underlying value and the market price. And there are ETFs which are very close to the NAV itself. But then you buy it like a stock. In case of gold fund, which in turn spend, and gold ETFs have the lowest expense. Gold funds, there is a cost over and above the gold ETF. They invest in gold ETF and there is a cost of running these gold funds. So depending on your degree of sophistication or ease of, being conversant with the marketplace, ideally you should buy gold ETF the way you buy shares from your stockbroker, or if that is getting difficult, buy the gold mutual fund. And the expense overlay is not very high. So for choosing the best ETF, go to Value Research Online, go to the fund section and look at the market monitor. And there is a category of gold fund. Click on that and you can see the performance. You can look at the expense. Performance is all in the vicinity of 25 basis point. So just look at the expense and go for it.
Okay. What are the tax implications of investing in gold?
When you buy physical gold and not hold it for more than 2 years, it is considered as short-term gains and add it to your income, whatever be the gain. To be treated as capital gains, you have to hold it for 2 years and more. Over and above that, physical gold, when you buy, you have to pay the GST, so that is gone. So you have to factor that when you're buying physical gold or considering the ETF or the gold fund. Gold ETF and gold fund, no GST. Then you hold it for 1 year. It is considered capital gains. Less than 1 year, it will be added to your income. So the financial form of holding gold through ETF or gold fund is beneficial.
All right, so while gold is at its all-time high and is a store of value, don't get too excited right now because it also has its downside. Now moving to the viewer's question, Jim says, in the current market scenario, I've been researching the fixed income options available to us. Considering the tax efficiency of all current options for investors in the highest tax bracket, can the NPS Tier 2, if we choose schemes comprising solely of corporate debt and GSECs, be considered for the same? NPS Tier 2 provides the flexibility of anytime withdrawal, and fixed income options there have given decent returns. However, there is no clarity regarding the taxation on withdrawal from the Tier 2 account. So will this be capital gains or income from other sources, if you could advise?
No, just to be safe, because there is no clarifications, it should be considered as income. More conservatively, one should look at that. Following the convention of conservatism when it comes to accounting issues like this. More importantly, there is one advantage of this NPS account. If you have to take it out is one issue. But if you move your money into Tier 2, take the money from GSEC fund or corporate bond fund to equity or vice versa within the Tier 2, that is not taxable. So once you move your money into tier 2 and let it remain there for 10-15 years and you are changing the allocation at your will, there is no tax implication of that. You will be taxed only when you take it out, when you take it back. Any long-term fixed income investor should well consider this tier 2 as a very attractive option because they have done well. And when it comes to fixed income in a mutual fund format or a diversified portfolio of fixed income or bonds, then the most material thing is expense, and NPS costs are the lowest.
If you liked today's episode, keep watching this space for more information. Subscribe to our YouTube channel. Take care. Bye for now.
ये है मिस्टर सैनी और इन्हें है बड़ी बेचैनी। कुकिंग रील्स के बन गए फैन और बनाया खुद का कैफे खोलने का प्लान। जब साथ बने फ्राइड राइस, लॉलीपॉप तो कस्टमर बढ़ते गए नॉन स्टॉप। एक कैफे के हो गए 4, बढ़ता गया फैंस का प्यार। ऑटोग्राफ, सेल्फी, इंटरव्यूज, पर इतने में प्लानिंग का उड़ गया क्योंकि मिस्टर सैनी भूल गए उनका सबसे इंपॉर्टेंट प्लान यानी SIP। तो अपने ड्रीम लाइफ को सिर्फ डे ड्रीम मत बनाओ, उसे पूरा करने के लिए SIP स्टार्ट करो। एन इन्वेस्टर एजुकेशन इनिशिएटिव बाय आदित्य बिरला सन लाइफ म्यूचुअल फंड।
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से संबंधित सभी दस्तावेजों को ध्यान से पढ़ें।